Welcome to the New Wealth Wave podcast hosted by Dr. Joaquin Wallace. We're diving deep into the intricate layers of the 7-stage generational wealth model to offer invaluable insights on legacy building, wealth accumulation and preservation, and financial growth across generations. I'm Dr. Joaquin Wallace, and this is the New Wealth Wave podcast. Hey, future wealth builders, Dr. Joaquin Wallace, thank you for joining me for another episode of the New Wealth Wave podcast. Today, our focus will be directed towards stage 4 of my 7-stage generational wealth model. And to help lead the discussion will be Dr. Bryan, the founder of Sev Talks Money and a fellow podcaster. Dr. Bryan focuses on helping women turn financial challenges into practical power. She draws from her late life divorce and financial rebuilding journey, emphasizing that true economic freedom starts with reshaping one's money mindset. Dr. Bryan, first and foremost, I'd like to thank you for coming on to the podcast itself.
You're welcome.
So if this is your first time tapping in, the New Wealth Wave podcast is based on my 7-stage generational wealth model that focuses on 3 phases, the past, the present, and the future, broken down into 7 stages. So let's get into it. Stage 1 is our internal and external ecosystem, walls in and walls out. It sets the foundation for our financial journey. Stage 2, financial genetic code, where we focus on our financial traumas and anxieties. Both of them are byproducts of stage 1. Both of these stages are related to our past. Stage 3, financial healing. This is where we begin the healing process, reforming our financial genetic code, which is a byproduct of both stages 1 and 2. Stage 4, financial edification. This is where we focus on both financial literacy and financial inclusion. Today, Dr. Bryan will be focusing on stage 4. Both stages 3 and 4 are the present. Stage 5, financial well-being. We all want to achieve this, focusing on not outliving our income, and financial health equals financial wealth. Stage 6, generational knowledge. This stage provides us with the blueprint to properly transfer our knowledge and assets to create our financial footprints, which leads us to stage 7, generational wealth. The final 3 stages is our future. Now, Dr. Bryan, you had a chance to look at the model. What were your initial thoughts?
Well, I certainly loved that it was not linear because our financial journey is never linear. I like the fact that it goes in a circle, and sometimes you can find yourself going backwards to another spot in the circle. So I really like the presentation. I like the fact that you have a present, a past, and a future, because we're always growing in our finances. We're always learning, evolving, and that is represented on the different stages here on the model.
And that's a great point, because you can enter the model at any point. I've had clients that come in at stage 5, and that may be their present at that time. So although stage 5 is the future for some, it may be the present for that particular person itself. So it's not a one-size-fits-all. Each person comes in, their entry point is different, and their exit point is different as well. But again, it's one of those models that you're constantly navigating, you're constantly negotiating, what stage you're in. It's not linear, as you mentioned. It's a circular process. You can go clockwise, you can go counterclockwise, you can jump back and forth as well. You may have had a situation that will give you a financial flashback that takes you right back to stage 2 of the model itself. So before we get into the heavy lifting, I always ask one question to get the listener to kind of know you. Some of your listeners don't really know what you do outside of saving lives, so to speak. So with that being said, tell us a fun fact about yourself.
Well, I taught myself to play the drums. I was at a church. They had a drum set, no drummer. And me being as nosy as I am, decided to jump on the drum set and start playing, quote unquote. Today, I have a drum set downstairs that I have been practicing on over all those years. And music is so exciting to me. It really helps me to meditate. And so me playing the drum set, listening to different music and playing the drums really, really helped me to focus on different things. It takes me away from the craziness of the world. So I taught myself to play the drums. And that's one of the things people look at me and they're thinking, well, you seem a little bit introverted. You're playing the drums?
That's interesting because, I'm a fellow musician as well. I've toured at some point. I was a keyboard player, and I just recently purchased a trumpet. I've always wanted to learn how to play the trumpet. So I'm teaching myself how to play the trumpet with the help of YouTube. I've taken some lessons as well. Music is a great way of kind of relaxing. It's very humbling and challenging at the same time. So I do applaud you in regards to your effort in learning how to play the drums and continuing to play story as well, because it is extremely fulfilling. So now we get into the heavy lifting, but we always ask 3 questions. These 3 questions kind of set the tone of the podcast and direction we're going in itself. So the first question is, before you became an advocate in the space of financial literacy where you're at today, where were you initially located on the model?
This was a tough question because I had been teaching personal finance for 20 plus years before even understanding that there was a financial community, that there was a community of people who did this work. And I'll go back to when I was 15 years old, back home in Jamaica. My dad added me to his bank account because he said, you have an affinity for numbers. You have an affinity for money. I didn't know what that meant. And people would see me and they thought I had money because of the way that I carried myself and the way I managed money. So I want to say I'm at maybe -1 stage is
Okay.
where I started. But at the same time, I'm thinking that I may have been between 1 and 2 because I had some semblance of what personal finance was, but I didn't really understand the application and the true implication of personal finance until I got divorced in my late 50s. So starting and teaching over 20 years at the church level, different churches, maybe between 1 and 2, but in terms of understanding what I was teaching and being intentional, I would say I was -1.
Well, you know what? Don't feel bad, because we've had people that come on -2. So, I mean, this is the purpose of the podcast itself. And that's why the model is so beautiful, because when you look at it, when you ask that question, before you became who you are today, where were you at? And it's a reflection. You got to take self-inventory and say, actually, where was I at? Was I at stage 1, or was I even before that? We've had people come on as -2. So don't feel bad at all. Our listeners are used to hearing everything on this podcast. So with that being said, you mentioned you may have been at -1. Currently today, what was your aha moment that you knew that change was imminent?
I think it was when I got divorced in my late 50s, because as I said, I'd been teaching personal finance for many years in my church because I was just tagged naturally. You're going to be the stewardship director. You are going to help us with finances because of the way I carried myself and just the natural affinity that I had for numbers and money. And when I got divorced, I had to really sit down and look at what I was doing and the intentionality behind it. I was doing all the right things. I was saving money. I was investing, putting money in my 401k. I was doing all those things by rote, not really with the intention to say, I want to retire by 50. I want to have X dollars. None of that. It was just, I was supposed to do it, so I did it. But then after my divorce, I realized I need to really sit and plan out what I want my life to look like financially. And that was my aha moment, because after going through the divorce and seeing my credit drop in the 500s, because I walked away from my house and seeing my finances really decimated, no savings, because I had to pay for a divorce, and then seeing my net worth go to negative, having to be intentional and rebuilding. And 7 years later, I am perfectly okay, thank God. But having to go through that process really helped me to see that not just knowing about personal finance is good, but knowing why you need to know it and how you need to apply it is very, very important.
I have a theory, and this is why stage 4 is so important. When we talk about the model itself, we say stage 5 is financial well-being, financial health, not outliving our income. But, I work with a lot of clients, and oftentimes one of the questions I ask them in regards to their 401ks is, do you know your portfolio? Do you know your risk tolerance? Do you know what you're investing in and things of that nature? And I really believe that I would say a large portion of individuals that participate, many of us that participate in our 401ks, qualified plans at work, we only do it because someone told us to do it. We have no idea what we're doing. That's why we're never really able to take full advantage of it in terms of maximizing the most that you can participate in, whether it's a Roth 401k or a regular 401k, or the different vehicles that are out there. So I always look at it as going broke safely, right? And so what we do is we don't want to expend too much money because we believe we need to have it, which if we know how to strategize, it really does help us. But in the long run, we don't really fully take advantage of it because we don't know exactly what we're investing in. So you kind of echo that as well. So with that being said, where are you currently located on the model today?
Well, before I even share that, you made a point about the 401k. One of the things that I did was putting it in before tax, everything before tax, because again, I didn't understand the strategy behind it. So I want somebody who's listening to understand that when you are putting money in the 401k, think about the strategy. What is it that you want at the end of the day? Because putting everything in there before tax is great, but just remember, all of it is going to be taxed when you withdraw at retirement. So you definitely want to sit down with someone and have that conversation. So you ask, where am I currently located on the model? And I would say I'm straddling 4 and 5, having the financial knowledge, understanding what I need to do, and then getting to that place where I was able to walk away from my job in December of 2022 because I have some semblance of financial security. But then I also say I have a little bit of a foot in stage 6 because my daughter, who is 24, she is in college, and I have always had a financial conversation with her, not in a sit down, let's talk about money way, but driving on the street, she would say, I want to get so and so, and I'll say, well, let's talk about it. What's in your account? So we'll have those conversations. We're in the grocery store, and she would want to buy something, and it's maybe $6 for one bottle, and it's $14 for another, and she wants to get $6. And I say, well, let's look at per ounce. So we'll have those conversations. And she surprised me. She works part-time while she's going to school. And the first thing they did is gave her a letter. In that letter, it said, you can apply to the 401k program. She brought it to me immediately. Mom, what do we need to do? So she now at 24, contributing to her 401k, she's opened 2 high yield savings accounts, and she has a Roth IRA with Vanguard. So that's why I'm saying I think I have a little bit of stage 6 because that generational knowledge has been passed on. Now, what she does with it after I'm gone, I don't know. But for now, that's where we are.
You're setting the seeds of the foundation, right? And that's the key to the entire model itself. And that's one thing that we're missing in total in the marginalized communities, outside the marginalized communities, those conversations. We're so focused on 2 things. And let me get on my soapbox right here: financial literacy and generational wealth. That's what we focused on. But I've always said that in order to get generational wealth, you have to have the generational knowledge. So that's the key. We're not only transferring assets, we're transferring information, which may be more critical than the assets itself, because without the knowledge, you can't take advantage of the assets. Also, financial literacy, I look at it as a Band-Aid to a bigger problem because there's so much more involved in that with the financial shaming and things of that nature, understanding the behavioral aspects of it versus the traditional aspect of it as well. But again, when we look at just financial literacy, I think we're just missing the boat because we're just putting a Band-Aid on a much larger problem. I was just having this conversation with someone earlier, and I was saying, listen, we can go over financial literacy till we're blue in the face. But at the end of the day, if we're not looking at the behavioral aspects of it, we're not looking at our stage 1, our financial genetic code, stage 2, and reprogramming, regardless of what I teach you, in most cases, you're going to go back to whatever financial flashpoints that you may have, whatever your money scripts may be. You're going to go back to those behavioral cognitive biases that you have inherited, and it's going to affect the way that you invest in or participate within this financial journey.
I think that Vanderbilt will agree with you.
Yeah, I would say, hey, Future Wealth Builders, we're excited to have Dr. Bryan, founder of Sev Talks Money, an accredited financial counselor who focuses on helping women turn financial challenges into practical power. Make sure you tap in and subscribe to the podcast. You can find us on Apple, YouTube, Spotify, and all of the major media platforms. So let's get into the questions. Dr. Bryan, are you ready?
I think so.
Okay, here we go. Question number 1 for you. So financial inclusion remains a barrier for many. In your expertise, what are the most effective ways individuals and communities can address these gaps and ensure broader access to financial tools and education?
One of the things that bother me is driving through neighborhoods and seeing all of these liquor shops and all of these buy here, pay here stores, but not as many banking services, not as many banks, not as many community development centers, the places where people can go to get information and to come out of poverty or to learn about the different things they can do. So having access to basic banking services, I think, is one of the things that can help people understand how they can become inclusive in the financial landscape. Credit unions, your community banks, those are some of the ones that will take care of you in the community. The big banks, they're not going to be looking out for you. So you want to look at credit unions and community banks because they're the ones that are going to be offering you alternatives to the high fee services. You want to partner with grassroots communities, grassroots initiatives, the United Way, the CDFIs, all of those companies or those organizations, your churches, your community center, your libraries. I'm actually going to be teaching 2 classes in April for Financial Literacy Month at my library. So these are opportunities that we have to really learn about personal finance, especially if you're in a low income area, you can't afford a coach. You can't afford an advisor. Take advantage of these community initiatives. Take advantage of these community programs and learn about how you can get from where you are to where you need to do. And take advantage of technology. There are a lot of things that are on the internet in different places that you can learn. The problem is it's a double-edged sword because there are people on the internet who share information that are erroneous. Like one I saw that said, if you update your credit report with the correct address, you can get up to 70 points. Bunch of baloney. But people gravitate to that because they want the easy fix, the microwave fix. Now, me telling you there are 5 parts, there are 5 pieces to your credit score, and these are the things you need to do. You don't want to hear that because it means you have to look at your numbers and do some work. But the technology is there. Just do your own research and really try to ask somebody else. If you see something on the internet, ask somebody else who you trust to help you vet that information. So those are some of the things that I think people can do to lower the barrier when it comes to financial inclusion.
I got a question for you. So you have a podcast, Sev Talks Money. Talk to us about that and how did it all start and what are some of the topics that you delve into?
It started because I thought people needed this information. It was during the pandemic and I had the time and I've always wanted to do something like this. And I had no idea what I was doing. In fact, I did a video podcast first and the video was black for the first 5 minutes because I didn't figure out how to turn on the camera. But I just had this thing because I wanted people to have what I had. I wanted people to have the hope and realize that just because you're in this situation doesn't mean you have to stay there. And I knew that coming out of my divorce and being able to rebuild my finances, I wanted people to have that information, knowing that if you can't afford it, it's still there. So I wanted to give people hope. And that's one of the reasons why I started the podcast. We talk about credit cards. We talk about debt. We talk about how you can use financial therapy to understand what causes you to spend the way you spend, because nobody gets up and say, I want to file bankruptcy. I want to live a life where I have to file bankruptcy. Nobody says, I want to not have savings. But there are things that we do that contribute to that. How can we understand those behaviors so that we no longer do those things? The person who win the lotto, millions of dollars, and they're broke 2 years later, they always thought, if I had more money, I'll be fine. They had more money and they now are not fine. So how can we give them some information, the education, the tips, the strategies that when they do get that money, they can grow? So that's one of the things that was on my mind. Another thing that pushed me to do that was I saw that in our community, the interest rates that we were getting on these car notes, the deals that we were getting were just wrong. We were getting these higher rates to buy a house in the same neighborhood. We would be paying 1%, 2%, 3% more than somebody else who was our next door neighbor who didn't look like us. And so I want people to understand that they had options. They didn't have to accept those interest rates. They didn't have to accept those deals. They had options. So those are the kinds of things that pushed me to be so passionate and to really want to do this work. And the YouTube channel was born out of that. And the podcast was born out of me wanting people to know they have options.
You mentioned that you were divorced late, and so that was one of the reasons why you had to come to that aha moment. Do you meet with a lot of clients that was in a similar kind of predicament that you were coming out of divorce in their late 50s or early 50s? And if you have, what some of the strategies have you been able to help them along with?
Ironically, I don't have a lot of clients in that situation. I have a lot of younger people who gravitate towards my services. They're either just starting their careers or they've started and they're making some money and they're a little bit confused as to what to do. So one of the first things I have them do is, where are you now? Because a lot of people, when they come to me, they want to get here and they're just looking at where they want to get to down the road. But in order to get there, you need to start somewhere. Where are you now? So we look at your numbers, and I've had clients tell me, I don't want to know what I owe, but you need to look at the numbers. So that's where we start. We start with where are you now? And then we look at where you want to go and figure out a way to get there. And each client is different. We don't apply cookie cutter processes, because for one person, they may come in and they're making good money. They're making just about enough over their bills. How can we maybe cut back your expenses a little bit so you can go on that vacation that you want to go on? That may be their goal, is to go on that really nice vacation. They graduated from school. They're making some money now. They want to have that really special vacation. So that strategy is going to be a little bit different, because now we're looking at your expenses. We're looking at what it is that you're investing in. How are you looking at your money? We also do a money habitudes test with all of our clients so that they can kind of see mindset wise where they are in their finances. So we look at that, the money habitudes, and then we look at where they are in their finances so we can put those together to create a strategy for where they want to go.
Sounds good. So your work empowers women to rebuild their financial lives and significant life changes. In your mind's eye, how do you define financial literacy, and what role does it play in transforming lives, especially for women starting over later in life?
Financial literacy is more than knowledge. Me telling you that 401k, this is what it is and this is how it works, doesn't really help you unless I can show you how it works for you. So for me, that's what financial literacy represents. It's understanding the terminology, understanding the different tools, but how do those tools work for you? Because where you are, a 401k might not be your best thing. It may be an annuity. It may be life insurance. So it's not just what the tools are, but what are you wanting to achieve? What are your values? What are the things that you value? Somebody may come to me and they say, I value tithing, and they have no savings. It's not for me to tell them you can't tithe and you don't have any savings, but I can show them how having savings can help you in the future. So it's putting together the knowledge, the information, and how it can help you advance in the values and goals that you set for yourself.
So, Dr. Bryan, you're an accredited financial counselor. What does that mean, having those type of credentials?
Let me go back to how I got there. It required me to have over 1,000 practical hours. So I had to coach people. I had to create presentations. I needed 1,000 hours of that. I sat for a 3-hour exam. And then I also had to sign and do some courses around ethics. So that allowed me to become an accredited financial counselor. And basically, an accredited financial counselor helps you with the basics of your finances. We help you manage your money. We help you understand how you can make the most of your money, how you can get out of debt, help you grow your credit. Let's say you got a job offer. It's not just the job offer. You got a job offer, $50,000. This one pays you $60,000. The $50,000 one might be better for you. So we help you look at your benefits. We help you look at all those things, put a dollar value to it so you can really see apples to apples which job offer is better for you. So those are the kinds of things that we do as an accredited financial counselor.
I firmly believe that there's 5 different type of financial professionals that are out there, and I speak about it in the book that I'm writing, and drops in Financial Literacy Month as well. But the 5 financial professionals are, in my opinion, you have the financial counselor, you have the financial educator, you have the financial therapist, you have the financial planner, and you have the financial advisor. Each one of those individuals provide a different piece to your journey. Oftentimes than not, the industry is telling us that one person can do all 5. And I firmly believe you need to stay in your lane. You can collaborate with individuals, so to speak, to kind of take that piece, because you want to specialize in what you want to do. And the counselor side of it is so important too, because we talk about credit, getting a loan for a home, the things that you need to do to move you forward to get to where you want to get to, as you mentioned earlier. But oftentimes and not, we don't see that. We think, I meet with a lot of clients and they say, I need a financial planner. And after conversations with them, I'm going to say, no, you need a financial therapist, because the therapist is going to allow you to break those barriers, those cognitive biases that you've had, unbeknownst to you, the heretics, so to speak, that have come to you. Whatever I say or do, you're going to push back. And so we need to make sure that you're in the financial healing stage, that you can receive information as well. What are your thoughts on that?
I certainly believe that. And that's one of the reasons why I have a list of referrals, because I've had clients come to me and I've had to say, you're not quite ready for my services yet. I think you need a financial therapist. So I have a roster of financial therapists. I've had people come to me and I have had to send them to a CFP because what they're looking for is not what I offer. They're looking for a CFP to help them maybe with estate planning or something to that effect. So that is another of my pet peeve is people who are selling something specifically and people come to them, they're selling that service despite what their client needs. And I think we do a disservice to our client when we do that. So we need to understand all the different facets of personal finance and stay in our lane, as you said, but who can help this client advance further or who needs to help this client get to where I am in the service that I provide. So yes, I am in total agreement that we have all these different areas in our personal finance. Stay in our lane, but we need to be aware of the other ones so that we can pass the clients on to them.
Absolutely, servant leadership. So, another question for you. You often discuss passing financial wisdom to the next generation. How can families foster financial literacy in children and young adults to create a legacy of generational wealth?
I think role modeling is one of the best things we can do. Unfortunately, not everyone is aware of what they need to do. But if you are, introduce your kids to money and understanding what it means. Instead of saying to your children, we can't afford it, the message you may want to say is, these are the things that we want to do this month. Here are the priorities. We want to do this thing, but because we want to maybe go on a trip, we're not going to get you the Xbox this time. So now the children are learning about choices. They're learning not that you can't afford something, but you're making one thing a priority over another based on the things you want to achieve. So I think role modeling and having those conversations with our kids is one of the best things we can do because those lessons stick. We have to be careful of the language that we use. Saying things like, do you have McDonald's money? Or all those kinds of languages that we heard when we were growing up. It really creates a mindset that's not a prosperity mindset when we tell kids these things, because one of two things will happen. Every money they get when they get older, they're going to hoard it because they think I'll never have enough money to do the things. Or they will just spend all the things I couldn't get when I was a child. Now I'm going to get all the things because my mom told me all the time we can't afford it. So our language is so very important as we transition our financial knowledge to our kids and expose them, take them to different classes so that they can really understand how other people look at money, not just what you know. There are classes that are offered for kids. Now schools are requiring high schools to learn about money, but I think that's too late. They really need to start doing that at the elementary, have people come in and show kids how to budget. If you want that pair of shoes versus the headphones, how to make the choice about those things. And having the practical education things at home, understanding what the family goals are, what your individual goals are, and how we can make them happen with the resources that we have. Let them understand that there are limited resources, but it doesn't mean that you can't get more resources. So, they're not thinking, oh, there's money to get everything. But at the same time, they understand this is what we have and this is what we're working with. But this is what we can do to get more so we can get that next thing. And the last thing I would say is really encourage their curiosity. Encourage kids to ask questions. When I was growing up, I was told that's none of your business. That's adult language. No, we need to encourage curiosity. Our kids, their minds are so mobile. It's so open to understanding all the different things. And we can engage them at their level. And then if they get to a point where they're asking something that's maybe a little bit over their head, we can find a way to either explain it to them or say, okay, this is as much as I can explain to you. But later on, I'm going to talk to you a little bit more about it. You know your child, bottom line. You know your child and you know how they will receive information. But we should never tell our children that's none of your business because it is. They're part of the family. So it is their business. We just need to choose what kind of language we share with them based on how we know our kids and the understanding that they'll have with the information that we're going to share with them.
That's so important, and that's why stage one of the model is so important. We talk about walls in and walls out. You mentioned that the language that you hear, some of the phrases, the colloquiums that go on in the community, money don't grow on trees. So you start thinking along those lines. Like I always say, one of my favorites is, I'm so broke, I can't pay attention. You start hearing, these type of
Yes.
phrases. But again, it's so important because when you look at the money script itself, You look at money avoidance, you
Mm,
look at money vigilance. You talked about individuals who may be working and start hoarding their money. So you have money vigilance. And I always tell my clients, listen, you have to live today and plan for tomorrow, because
yes.
tomorrow's not promised, but you have to be able to plan because guess what? You may live 15 to 20 years, but you have to be very, very mindful of what you're trying to accomplish. Live today, plan for tomorrow. But it's so difficult because that language, that environment, that walls in, what you've seen, and that walls out in terms of the external is what you view. You may be in money worship, money status, because what you see, you may not have anything. So those are the things that you think are more important. Or again, money avoidance. You don't want to talk about money. You have that as well, because that's why financial literacy can sometimes be financial shaming at the same time, because we really don't know that client. We don't know the background that they came from. That's why the cookie cutter approach isn't really too successful, because what works for you may not work for the other individual. So it's so important to really have a pulse of the client that you're working with and have a toolbox of information that you can always pull from to kind of help that client become successful in achieving the goals that they want to achieve. That's so important. So
Yeah.
another question for you. So what role does technology play in making financial education more accessible, and what potential pitfalls should we be aware of as more people turn to digital platforms for financial guidance?
There are a lot of charlatans out there. There are people who are going to tell you things to clear your ears, to get you to follow them, to buy their products. Their main goal is to get you to buy their products. Their main goal is not to get you out of debt. Their main goal is not to help you with your credit. So we have to use discernment. And that's the downfall of having access to technology and this kind of knowledge, because there are people out there with hundreds of thousands of followers who are really not trying to help people. But on the other side, we do have easy access to a lot of this information. And yes, there are communities where they don't have the easy access to technology to be able to get the knowledge that we want them to have. But again, going back to my earlier conversation, is you want to vet these people. You want to ask questions. And if you don't know the questions to ask, join groups. There are groups of people. There are people who with masterminds. If you are on social media, find those groups. Google it and find those groups and ask questions. Go to your local library. Ask the librarian, where can I find books that will help me learn about credit or any other subject? YouTube University is available, but again, you have to vet those people. Are they accredited? Do they have any kind of license? What kind of information are they sharing? Because again, a lot of people are there to grow their following so they can get money. They're not there to help people. And that's the kind of stuff that I'm so passionate about. This information that I share, I'm very careful to stay in my lane, because there are a lot of topics that I could share. I could learn about it and share, but I don't have the depth of information, which is why I bring people on my podcast who have the depth of information and they can share that. So I would say take advantage of technology. It is there, but beware and also check the people that's sharing that information. How are they sharing it? And how are they qualified?
I always tell clients, if you really want to know if a person is credible to give you the information, go to brokercheck.com if they're speaking about investments or things of that nature, because you have to be registered there, or finra.com. I'm on both of those. You can look at the disclosures and things of that nature. And most of the time, too, a fiduciary will not give you results. They're not going to tell you what to do. They're going to
Right.
meet with you. They're going to get understanding, do their due diligence, their background, and then come up with an action plan to help you achieve your goals. So you always have to be aware of that when people say, well, buy this, or, get an IUL, or do this, that, and the other. They're telling you that because they're looking, like you said, for clicks, whatnot. But for the most part, just go on brokercheck.com and just see, in particular, if they're talking about investment products, because the most frequent license, and I tell this to clients all the time, is the basic insurance license. And the basic insurance license allow you to sell insurance and fixed products, whether it's whole life, a universal life, or indexes. When you get into the variables and things of that nature, you have to have 663, 65. So you cannot sell those products without those. So what do you see a lot? Most people that sell IULs, fixed whole life, or ULs, they have basic insurance license. And
Yeah.
so that's a common license they have. And that's the ceiling in terms of what they can offer. You have to be very leery of those conversations, because if they don't have the full license, they're selling what they only have access to. And for the most part, it's all about commission
Yeah.
sales.
And I would add too that when you see people giving advice, like people call in and they give advice of what you need to do, and they don't know your entire picture. Nobody should be giving advice to anyone online without sitting down with them and understanding all of their finances, all of their numbers, what do they owe, all those things. Nobody should be giving advice. Yes, we educate based on various topics, but for me to tell you to make a decision or to do this or not do that, I should not be doing that. And if I do that, I should lose my license. I should lose my accreditation, because nobody, again, should be giving advice without knowing the entire financial picture of that person.
Absolutely. Future Wealth Builders, we are excited to have Dr. Bryan, founder of Sev Talks Money, an accredited financial counselor who focuses on helping women turn financial challenges into practical power. Make sure you tap in and subscribe to the podcast, as you can find us on Apple, YouTube, Spotify, and all of the major media platforms. Again, Dr. Bryan, thanks for taking time out of your busy schedule to come on. Spend some time in the studio of the New Wealth Wave podcast. Another set of questions for you here. So, empowering underserved entrepreneurs. Small business ownership is often a pathway to financial independence, yet many entrepreneurs in marginalized communities struggle with access to funding. What practical steps can individuals take to secure capital and build sustainable businesses despite these challenges?
Yeah, there are organizations that will help you with low interest loans. For example, the CDFI, the Community Development Financial Institutions, the Small Business Association. There are private organizations that will help you with loans that, the interest rate is not cumbersome. So you can check out those organizations and see how you can get low interest loans. I just completed a program where I got so much free information. I got a marketing plan, I got marketing strategies, all for free, because it's being funded by different organizations. So go out there and do the search to find the organizations that are offering those things and take advantage of it so that you can grow your business.
And I want to piggyback on that. I teach small business in regards to applying for loans and CDFIs and things of that nature. I tell clients that if you haven't been in business for quite some time, have a positive P&L, one of the things that they're going to look at is your personal credit, because you're going to be the guarantor of the loan, which is so important. So that's why that credit piece is critical,
Yes.
right? You have to have solid credit for you to be able to apply for those loans, in particular if you are a startup business. This is where most individuals fall short, because they don't realize how managing their personal credit history impacts their ability to apply and be funded for these loans, correct?
Yes.
And so, we always look at, there's 5 pieces to the credit cycle, so to speak, the pie chart, if you will. But the 2 things that you always want to, stand out is you want 30%, right? In terms of your usage rate is so important, 30%, and 35% in returns in making your payments in a timely manner.
Yes.
So, and I always tell clients, you have a pie of 100, 65% of your credit is based upon your usage rate of 30%, as well as your payment of 35%. You have to be on time, and you have to make sure that you're staying under that 30%, which is so important. Now, oftentimes I would meet with clients and they would say, I have my Experian, Credit Sesame, Karma. I have these reports, and I have to immediately tell them those are good reports to have, but it's a snapshot. That's not exactly what drives your credit report, because they're consumer based. So if you have a 625 or a 705 in regards to one of those 3, Experian, Credit Karma, or Sesame, that doesn't translate to an actual hard pull. Your hard pull may be less than that. And that's where the disappointment comes into play. But I tell them the only thing that you can do is control what you can control, which is your 30% usage rate and making sure you're on time, on target with your payments.
Yeah. And the usage rate is one of the quickest ways to grow your score, actually. Because if you think about it, if you have a credit limit of 1,000 and you're using 900, if you can pay that down in a couple of months, your score is going to jump up. And there's a FICO score and then there's a Vantage score. And that's becoming more popular. There's 6 parts to the Vantage score. There's 5 parts to the FICO score. The thing is, they both use the same data, but they're scored differently. And so when people look at, they're putting the Credit Karma and the Credit Sesame, they're getting Vantage score and they pull their FICO and they're like, this is wrong. It's not necessarily wrong. It's just that it's scored differently. It's scored on 6 pieces of data or 6 percentage points, whereas FICO is scored on 5 percentage points. But it's using the same data from your credit report. That is a great point that you brought up, Dr. Wallace.
So, redefining financial security post-life transitions. Financial setbacks can be challenging to recover from, whether due to divorce, job loss, or unexpected life changes. What mindset shifts and practical strategies do you recommend for those starting over later in life to regain financial stability and, most importantly, confidence?
I think one of the first things you need to do is grieve where you are, but don't stay there. Yes, this happened, grieve it, and then figure out how you can move on from there. Look at obstacles as opportunities. And know it's hard because we're not only dealing with the physical impacts, we're dealing with the emotional impact of whether it's a lost job, a lost relationship, we're dealing with the emotional part. So give yourself grace to grieve that, but then look at that as an opportunity. What are the lessons that I can use from this to move forward? Is there a lesson that I can apply to me, or is it a lesson that I can help somebody else apply to their life? So that's one of the first things I would say is really, you have to change your mindset. Yes, take the time to grieve and deal with the after effects, but don't dwell there so long that you can't see the opportunity in what you're going through.
Final 2 questions for you. What do you want the listeners to take away from this particular podcast?
I think I want 2 things. The first is that there's always hope. No matter where you are in your financial journey, there is always hope. And the second thing I want them to understand is personal finance is personal. That personal in the front of it is personal. So when you are listening to like a podcast like this, or you are going to work with financial personnel, understand that if what they are proposing is not lining up with your values and what you want personally, that's not the person for you. So there's always hope no matter where you are. And then understand choosing the person that's going to work with you based on your personal values, because personal finance is personal.
Final question. If someone wanted to get in contact with you and utilize your services, how would they do so?
I think the best way to do that is through my website, which is Sev Talks Money. That's SEV talksmoney.com. All of the other links to all my other social media, like my LinkedIn, which I'm very active on, my newsletter, all of that, you can get access to that through my website.
Dr. Bryan, on behalf of the New Wealth Wave podcast and my producer, Ray Haycraft, and myself, I would like to thank you for taking time out of your busy schedule to join us in the studio on the New Wealth Wave podcast this afternoon. And as we always say, generational wealth begins with generational knowledge. We'll see you on the next episode of the New Wealth Wave podcast. Take care. Thank you for joining us on the New Wealth Wave podcast, hosted by Dr. Joaquin Wallace. Our show is edited and produced by Ray Haycraft. To dive deeper into the world of financial wisdom and learn how to create your financial footprints, head to our website at www.drjwallace.com. For more updates and exclusive content, connect with us on social media by searching Dr. Joaquin Wallace. And if you have questions and comments, feel free to email us at thenewwealthwavepodcast@gmail.com. Remember, generational wealth begins with generational knowledge. And as always, thanks for listening. The content presented in this podcast is strictly for educational purposes and should not be taken as investment advice. The views and opinions expressed by our guests may not necessarily reflect those of the New Wealth Wave podcast and its host or producers. Listeners are urged to exercise discretion and judgment before making any financial or investment decisions. Always consult with a financial professional or advisor before taking any action based on the content of this podcast. If you're enjoying the New Wealth Wave podcast, we appreciate if you leave us a review. We're always open to topic suggestions and guest recommendations. Feel free to reach out to us directly with your thoughts and feedback. Thank you for tuning in, and we'll see you next time on the New Wealth Wave podcast.